Hey guys, welcome back. In today's video, we're going to talk about trends and counter trends. Let's jump right in. We're going to use chain link, something we've been using the entire time for our training videos. Everything's set up the way we used to use it with the support and resistance lines. If you guys didn't catch that video, go back a couple of days on the YouTube channel or on the Facebook group and watch support and resistance. Today we're going to talk about trend lines. Trend lines are not like they are in Forex. They don't have to be wick to wick or body to body. I've drawn them wick to body to wick, body to body, wick to wick. Whatever works, guys, as long as it's being respected, that's what we use in crypto. That is my experience. That's how I do it. So I'm going to show you examples right now. First, we're going to go over trends. A trend would be like this. This is a downtrend because price keeps finishing more downward. So this would be wick to wick. 1 point, 2 points, 3 points, broken, continues on. Really no nice retest in here. Really nothing showing me that this is the real trend. So I could go maybe wick to body like this. But as you can see, it cuts right through a bunch of candles, so it's not clean. Maybe body to body. Okay, body to body. Respected here. 4 candles respect here. Respected again here. Remember, guys, these are weekly candles. We are on the weekly chart. 3 weeks respected here. Broke down again. Broken. Small retest. Come back. Pinpoint retest right here. This is the real entry. This is where you want to be in the market at. And this is where we got our first entry. Okay? And this is on a long-term chart. We took this entry back in September of 2018, and look how far we've gone up. In a bear market, guys, we find entries like this because we work on the big charts, and we look for big moves, and we look for the technicals, because the institutions and the big whales and all the huge groups out there that are trading together are trading with these same fundamental rules, these same technical rules. And I'm teaching you guys that now. This is a downtrend, okay? A downtrend, okay? This is an example of an uptrend. So if price was to fall, let me get over here and zoom this in a little bit. So if price was to fall, it could fall back down to this level, okay? It could respect this level first and then fall back down and hit this trend line, spike to this level before holding up here. If that happened, you would have nothing to worry about, and you would know that because of your technicals. People freak out all the time in crypto because they think they see a fall and they think the whole market's going to zero. That's not going to happen. The whole market's going to go to the next level. They're going to respect the levels on the way down, and if you know where it's going next, you know where your risk is. So if it falls down in this area, I'm not going to be scared because it's going to probably hit my trend line for the 3rd time. It could blast off from here, but I'm looking at this trend line as my support area, along with my other areas that I've marked here as support and resistance, okay? So you try to connect these the best you can. This is from wick to wick. This is from body to body. However it works best, guys, is the way to do it, because wherever it's respected the most is the way it works out and the way it makes sense, because you want to see the retest and all that. See, this right here could work out too. Wick to breakout to retest right on this zone. Confluence right here. I just like this the best. It seems like it gave us the best opportunity, so we wanted to see this break, and it did. And once it broke, it retested. We took our entry. This is a 300% trade at the top. Of course, we're still in this trade. We've taken profit all the way up and re-entered in places like this. Now, let me show you a counter trend. We'll break it down a little bit more. A counter trend is no more than a retest, excuse me, not a retest in the market. A counter trend is no more than a retrace in the market, okay? It is a correction. For example, from here to here, the market is going up. It attempts to go bullish, fakes some people out. Those of you who know technical analysis and know about structure know this is no more than a correction in the market or a retrace. So when it goes down in the downtrend, breaks the downtrend, gives you another entry, goes up a couple 100%. This is not typical for every trade. But if you trade in the bigger charts, you're going to get bigger movements, but it's going to take you longer to get there. You don't typically see 200% candles in the market. So it might take you 3-4 weeks to get there, but if you're gaining 300-400%, you know, specifically in this trade, we've gained money all the way up. It got in September of last year. It's, you know, it's almost March, and we've been in this trade constantly and never been completely out at any given point. So understand that the only difference between a trend is the long term, the counter trend is the short term. And again, you can draw it many different ways, but where does it make the most sense? That is how you use trend lines and counter trend lines. And on the next video, we're going to show you how to use support, resistance, trends and counter trends, and Fibonacci tied all together to find your next area of entry and a good area of profit taking. Because if everybody's taking profit in a certain area, you might as well join them instead of losing it back to the market when it corrects. When it corrects, you enter back in and you have profit off the table. And that's what crypto trading or any trading is all about. See you on the next training video.